Hello everyone. Welcome to Growth Investing channel. I'm your host Narendra Singh, and today's point of discussion is how the year 2024 went, means a reflection on 2024, what we did, what went right, what went missed, what we missed, and our outlook for 2025. So I have prepared a small presentation for this, and let's move on to the presentation. Let's go through a standard disclaimer. Investment in securities market are subject to market risk. Read all the related documents carefully before investing. A registration granted by SEBI, membership of BSL, and certification from NISM is in no way guaranteed performance of a IA or RA or provide any assurance of returns to the investors. So let's move on to the presentation, please. So if you look at the year 2024, it had been a year of events, amazing good year of events. It began with the, you know, rising of BRICS as a group, then change of a unipolar world to a multipolar world means, if you might have noticed, US was the single pole, single superpower across the globe. With the rising BRICS, rising China, and Russia and India. Now we see that the world is moving away from a unipolar to a multipolar world. Another bigger event were election both in India and US, and both had, altogether interesting outcomes for both the countries. Geopolitical conflicts. The world has seen more geoconflict in this year post World War II, whether it was stress between North Korea and South Korea, stress in Russia and Ukraine conflict, Middle East with the Palestine and Israel, then Israel and Hamas, and then regime changes in Bangladesh, Syria, and to an extent in Korea, where the current president has implemented martial law in putting democracy at risk. Then we have also seen easing monetary policy across the world, means the central bank has gone for a rate cuts, started with the US Fed, Bank of England, and I think it's yeah, EU Bank. Japan has not responded, but yeah, mostly all the developed countries' central bank went on for the easing of monetary policy, which is done with the help of rate cuts. Then we have seen another big event, and which is still a cause of concern, is U.S. debt. It's burgeoning, mounting U.S. debt, which I think as of now Americans had been thinking of that this is a good one for our economy because with this, the more the debt, the more is the GDP, and the more are the taxes they collect, and gradually it would be brought down. This is what the approach seems like. Another event which we saw post Q2 quarter two results was a sudden slowdown in the earnings, and there were various factors attributed to it. It was we had been in election since Feb onwards. Election lasted till May end, then June result came in. So the government capex could not be expanded or utilized during this period. Yes, which is fairly true. And then we had a prolonged or a extended monsoon, which is again good. I won't say it's bad, but both of them resulted in lower earnings of the corporate, and the effect can later on be seen in the GDP. GDP growth. We grew in H1 by 5.4 somewhere. So the next H2, which is beginning from 1st of October till 31st of March, we could expect better growth, and the overall GDP is expected to be around 6.8%, which is as per the estimates of RBI. And a fantastic event which India hosted was G2 Summit here. and the world has seen India. They have seen what we are doing, where we are progressing, and what kind of a new India we all are representing. It was a fantastic event, I would say, and overall, it gives a what you call your impression of who you are, how good you are in execution of things, how good you are in planning of things as a country. So, congratulations to all of you. Moving on to the next slide, which is reflections again, but what went right and what didn't went as we planned. So, post-election outcome, we could see that policy continuity is there. So, which is a very fantastic outcome of the election. And India, despite being an election year, extended monsoon, never lost its focus on focus sectors like energy, semiconductor, electronics, railroad, ports, and all this which are critical for the nation building. So we held a close, tight, focus on these, and which is again good for us. Job growth, yes, we have started seeing the job growth across IT and across the manufacturing. And finally, what you call India's AI potential, because now we have started thinking or we have started implementing AI projects which are real good and which holds a better future for us in terms of developing AI models, implementing those AI models, bringing in the efficiencies, bringing down the cost, predicting what is whether it is in science or defense or into the consumers, everything around it, models which can work wonders for us. So all this with the help of AI. Then we have seen the biggest of IPOs, largest of the IPOs, and the most IPOs in this year. And we will call it as an IPO frenzy, largest, biggest, and actually we are going from good, better, best in terms of capital market. And another good news, we have seen the highest continuous mutual fund inflows through SIP or overall inflows, which is again a good sign, a resilient economy, a growing economy, confidence of its local residents, local investors. Good for it, and for sure, these going to bring better results for us. Again, what didn't went as we planned? Lower capex. Capex means a capital expenditure. Capital expenditure means uh, investing in the infrastructure, investing in the plant and machineries, investing in the railroad, airport, port, highways, uh, telecom infrastructure, communication infrastructure, digital infrastructure, all this. Second was Q2 earning below estimate. Yes, nobody expected Q2 slow down, quarter two to slow down so fast. This led to a revision in GDP, which is again from 7.2 to 6.8 as per RBI, and various analysts or various brokerages or various fund houses, investment banks has predicted it between 6.4 to 7%, which is a fair average. So we have taken 6.8 based on the RBI estimates. Stubborn inflation means inflation is a direct impact on our pockets, on our saving, on our purchase, whether we purchase food or clothing or any discretionary like car or scooter or something like this. So here you will see that inflation has impacted us. It is a direct drain on our pocket. So it remained high throughout the year, typically in the food and groceries. And then on the market side, we have seen underperformance of large and small caps. Typically these two, wherein mid and the large mid caps did well, and even SME index did well. SMEs also had been a star of the year, and the net outcome had been an overvalued market for 2024, which is a cause of concern. But yes, with the market is now holding on to its levels, and I think uh, gradually a time correction will happen, not the level correction. Time correction will happen, and they will fall in place once we start receiving Q3 results which are expected to be good because we had a long festive season. And I expect almost all the sectors to perform well in Q3. So we'll again come back on the same track. And gradually, this Q2 slowdown would be a left out story. Well, now also let's see what growth investing small cases have done in the last year till date. So the data presented is from 1st of January till 24th of uh, December, today. That is today. Here, what I have done is on the left-hand side, these are the name of growth investing small cases. Then the returns which they have produced in this period, and the multiple of return in reference to the corresponding index return, and the index name. These are basically the 5 line items or 5 columns where we are trying to analyze. GI FlexiCap Super Achiever is mapped to Nifty 500 index. So in this year, it has produced 56% till date, and index returns are only 15%. So it has given you a multiple of 3.6 to the index return. GI Midcap Growth Champion, which is a hero product of the year, I would say, star product of the year, has produced around 78% in this period. And the index, which is midcap 150 index, had given 23%. So this is again given a multiple of 3.4 to the index returns. GI Bharat Next Gen, which was launched on 9th of September, uh, had given us around 13%, wherein uh, the index in this period, which is Nifty 500, we have taken, has given minus 5%. So in relation to the index, it is given a multiple of 2.84 in the same period of 9 September till 24th of December. And another silent product is GI Top 10 Blue Chip, which is being constructed from the inverse of Nifty 50, is given 19% in this period, wherein index, our main index, which is Nifty 50, till 24th of December, opening of 1st January till 24th of December 2024, is given 9% kind of results. Which is again, it is given 19%, which is 2x of it. Then GI Next 50 index is given 29%, this is given 39%, and small cap has performed below even my expectation. So it is given 27% in this period, whereas the index is given 25%. So I I think next year or the period from here onwards, small cap should perform better. Whatever the correction they wanted to do, they had already done it, and their froth has gone. Their valuations are now aligned to an extent. Sectors where we see the growth, I think that would work. And the star of the year or the hero product of the year among the growth investing small cases had been GI Midcap Growth Champion. Moving on to the next slide. What is the outlook for 2025? What's good? So let's take up what's going to be a good, expected good in 2025. So I think with the Q3 results, Q4 results, we would be back on a 7% plus kind of a GDP growth estimate. And gradually, I think RBI would also ease the monetary policy by reducing the rates. So this will help us in bringing down the cost of capital for the private capex to then kick in. This would be a good stuff. Sectors to watch out for in 2025 would be primarily electronics manufacturing, data centers, AI, EV, healthcare, cyclical, energy, and realty. Cyclical means those sectors which are the prime movers of GDP. As the GDP grows, these sector grows. For example, steel, cement, capital goods, something like this. These are the core cyclical. Generally, that's why they are called as cyclical because they move in tandem with the GDP. Then IT sector is supposed to benefit if Trump, as he has promised during his election campaign, if he cuts on the corporate tax, that money which U.S. corporation will save in terms of corporate tax will be utilized in the IT infrastructure there, because US companies majorly are global companies and they treat IT spending as the capex spending, not as the operational spending. So this is a difference of approach. They treat IT investment, information technology investment, as their capex, which is good, which is real good. Then I see defense to no, I think they have bottomed out, and probably we might see, or once these results comes in and their valuation becomes a little more easier, and then they would. Another dark horse sector for us is aerospace, even though the listing is very less in that space. But yes, it should be, the kind of investment which is happening into aerospace or space sector is amazing. So we would see a lot of IPOs around this, not maybe this year or end of this year, 2025, I'm talking about. And this is a dark horse, and I think it should be doing good for India. My another expectation is earning expected to rebound across all sectors, all corporates, whether it is banking, infra, cement, cyclical, realty, or capital goods, everywhere it should rebound very well. Consumption, FMCG, healthcare, all. And good part is there are no major elections as such, so we would, as a country, we would be focusing on work. That's good for us. And I also expect, because Trump has many times during his election campaign has said it, that he is not a follower of wars. So I think de-escalation, easing of geopolitical stress across Middle East, across Russia, Ukraine, which is the Balkans and all, should go down. Easing in Korean Peninsula and wherever it is boiling, or that should go down, because for the environment to be conducive for business, these things has to go away. These things have to be off the table. Another, now also look at concern. What would be our concern in 2025? Some are serious, some are projections. So my personal observation is 2025 would be a volatile year. Now volatile year means globally it would be volatile years, because Trump 2.0 is Trump presidency, as called as Trump 2.0, would be marred with a lot of tariffs, restriction, protectionism for the US. Because as per his mandate, he wants to make America great again. So all the critical manufacturing, strategic manufacturing will shift back, or are shifting back to US. It is no more the global supply chains, or no more the China or any other country, which they believe might be a hostile later on. So this is one aspect of it. Uh, Second, what I see is world has now gone more hegemonic. Means uh, earlier it was only the American hegemon because it was unipolar. They were the superpower. Now, emergence of China, emergence of Russia, comeback of Russia, emergence of India, Middle East conflict. You see that almost every country, uh, I'm not saying India, but almost every country is kind of hegemonic now, or trying to assert their presence in the world. So this hegemonic behavior might be troublesome for us, and for sure it will disrupt to an extent a global flow fund, or global supply chains. So the theme, I think, for the next year would be, or next 3 4 years would be, from a globalized world to a localized world. Means protectionism will come up, tariff will come up. So each country will have to produce its own critical or the major produce out of it. Another is US debt and US market overvaluation, because US debt to an extent seems on the edge of being non-sustainable to an extent. Because if you cut the tax, how would you fulfill those tax obligations and all, right? And tax is the major revenue for a government. So debt servicing might become a crisis. So these are both two opposite poles opposite cutting off corporate tax and increasing your debt. If you increase your debt as a country, how will you pay it? Because for that payment of debt, you need revenue, and for a government, revenue is taxes. And overvaluation of the US market, because recently, with the recent, you call it the rally in US market, it has now become 50% of the market cap of world. Means whole of the world, one side, US on one side in terms of the market cap of their companies listed on their stock exchanges. This is something, serious. This is really serious, man. One country is holding the market cap means current price into the outstanding shares, and you do sum total of all of them versus the whole world one side, their current price multiplied with the number of shares they have given the company, outstanding shares, and sum of all the rest of the world still means only two. One side that is US and other side is the rest of the world. So this is called as a extreme case of overvaluation. So when something goes overvalued, you all know what happens. So another is US rate cut. If they delay the US rate cut, then the money flow will continue to be in US because slower rate cuts followed by strong dollar and the sanctions which or sanctions or tariffs will only push smart money to go back to US. This is another major concern, and we will see the fallout of this over a period of time as and when Mr. Trump inaugurates his presidency. And a cumulative term, cumulative collateral damages across the world due to multipolar emerging world. So the Prime Minister of Singapore, or I think the Deputy Prime Minister of Singapore, he had given a statement 2 years back that we still don't know the collateral damages of a rising multipolar world. This is very critical, very important, and something we all should understand because when a global power is weakened and the rest of the power are emerging, the previous or the existing power tries to put it hegemon, try to disrupt everything out there. And the resultant of this is called as the collateral damage. So that is a bigger concern. We might see what happens. And protectionism, I think, will disrupt the global supply chains. So means more or less gradually, China might dwindle as not as the global manufacturer supplier of everything, and rather uh, all of the countries will now start creating their own uh, what you call the industrial infrastructure to manufacture their own localized. Let's see how this plays up. And this is all for the day. And I wish you a Merry Christmas and a Happy New Year in advance. May the New Year bring you lots of good health, good wealth, and good success to you, to your loved one, to your family. And with this, I would say goodbye. Thank you. And you can reach us at 98105 00199, or you can write to us at help@growthinvesting.in. And also, please do subscribe, do share, and if you like it, do like it. Thank you so much.